Welcome to Markets Now. I'm Michelle Rourke with John Heinberg of Total Farm Marketing. Well, we had kind of a mixed close in the grains as well as the hogs, but fully lower in the cattle market. And John, I want to start off with corn. We were lower there, made new contract lows, old and new crop. The funds have been relentless sellers. Is this all about weather, the better crop conditions? What pressured us today?
Yeah, that's definitely what was the play today. We got through the USDA numbers on Monday, nothing big to shatter the corn market one way or another. And now shifted right back to weather. Here comes a 3% on the kind of unexpected jump in crop ratings. Well above what the market was anticipating. The market was anticipating a steady move for the week. So that just brings along the thought process that this crop, it could continue to get bigger. And there's nothing in front of this market right now that makes anybody nervous to want to be a buyer here. So prices continue to stay heavy. Now, did get a little support off that soybean market today. Got a little support off that wheat market. Did bring us off those lows. But, the trend, unfortunately, is still lower here as we go forward. Putting in another contract low today on December corn, as well as some of those prior months of that, just tells us who's in control right now, and that's still the seller at this time frame, with little fear of somebody wanting to step in front of them and buy this market.
All right, so with new contract lows in D's corn, how much farther do you think we need to go down here to, I guess, get the funds to quit selling or find a technical support area?
We moved that September contract to the $4 spot today, sitting here at 420 on the December. Those are some psychological numbers that might just hold us for a little while as we get some more confirmation, how this crop will go over the next handful of weeks, with pollination just right around the corner. We did see Mexico step in, buy some corn here at these levels for new crop last week. So maybe tells you we're getting to a bit of a value point here. But at the same time, the supply side of the equation, probably just the thought again that this yield may now move to over that 181 trend line yield. We'll see how that comes together with this July weather. Downside target for me right now is looking probably that 380 zone. If we get another break, maybe we grind here, like I said, for a little bit, and then we make that push as we move into August, into September, as we get a better, clearer picture that this crop is going to get itself put together like the market's anticipating right now.
Right. Soybeans just slightly higher after making new lows for the move. It looked like we kind of came back with the soybean oil market after the Senate passed the budget reconciliation bill.
Yeah, I think that was the driver in that soybean oil market today, was getting just that confirmation of what 45Z would be in terms of the tax credits. And that just lifted that soybean oil market up. And again, that's the driver in beans here. When we still get some rallies, I thought that was a really nice move off of beans. Looked pretty dismal this morning, breaking under the 10-20 window on November beans, just to come back and rally 13, 14 cents off the low. I thought was pretty nice to see. Now we'll see if we can get some follow through, or it's just going to be grind moments here as this market just works sideways. Now beans, it's all about weather in August. So that'll be the focus there, because that's when the crop is made. If we happen to dry out there and limit the crop a little bit, I think we could see some strength given some of that demand. And, we did have a little bit of an acre reduction yesterday. And again, that supply pile is still going to be smaller here in the United States, even despite the strength in terms of the global supplies that are out there.
Okay, let's talk about the wheat market. We did see a little higher close, mostly higher. Was that short covering today, or is the market concerned about the slow pace of the harvest?
I think it's a combination of things there. I think, we're at a spot where the quality of the harvest, the slower pace of the harvest, just bringing a little bit of premium into some of those outlier wheat contracts. We're still watching what's going on in terms of Russian harvest here. Some of those early returns are pretty thin because of the dry conditions. Obviously, that's the poorest of the crop. It'll get better as they go into it, but it's still enough to just kind of make this market want to be a little bit cautious here. Then we got to throw in that big macro factor that nobody really has been talking about in the whole picture, and it hasn't really had an impact. That's the U.S. dollar. I mean, we traded to February 22 lows this morning. Again, that just makes U.S. commodities a little bit more competitive on the global front. I know touching on corn quick, again, right now out of the Gulf, U.S. corn is a bit of an advantage to Europe and Africa and places of that nature. So that might keep those sales kind of moving a little bit for corn, soybeans, and wheat.
But are we cheaper on corn than Brazil or Argentina? That's where we've been losing out, haven't we?
In other words, to the Asian countries such as China and those areas, we are not at the cheapest point at this time. But again, to Europe and that area, we are. And so again, we continue to see some sales kind of stay in this market a little bit in the window where really sales should start dropping off. The other side that's a little bit helpful again too is just that Brazil crop is having a hard time getting harvested right now. They're way behind the pace, even though it's a record crop. It's not in the pipeline yet at this time. That kind of keeps things a little bit available for U.S. corn. It'd be nice to see that get reflected here in some sales as we get those numbers later this week.
All right, so when does the impact of the lower dollar start leading to some demand, or will you not see any spies here until we get past this July 9th tariff deadline again?
I think that's going to be a key component is this next tariff deadline and see where that goes. And in terms of some of the trade deals that possibly get announced, I know there were some smaller ones today that were announced that, at least provide some demand to the market. There's a little bit of uncertainty, like I said, that we still have in front of us with that. But I think as we maybe move into the fall, when those Brazilian crops are in off the fields, in the system, then we'll start seeing where U.S. prices kind of come into play. And that's going to keep us a little bit more competitive as we start looking at those second half of the year export business for that new crop corn and soybeans.
John, cattle sitting back in reaction to the news that the Mexican border is going to have a phased reopening. How much lower do we have to go to price that in?
I thought today was a pretty impressive move in terms of where we got to. Didn't like the little bit of the fade at the end of the day in terms of some of those cattle prices. Wouldn't be surprised to see those front end feeder markets get down and poke at that $300 level. Again, more on the technical side versus the fundamental. I mean, you still got this two different markets working here. The cash market is where it is compared to the futures and that extra wide basis that now again is really there. So there's still some mindset for me that, if we come back another couple dollars here, that feeder market's going to look cheap compared to what we're seeing in the sale barn right now. Again, making maybe those front months a bit of a value. Same thing on the live side. We got a lot of ground to cover here to catch up to where June came off the books in that August contract, especially if the cash market can kind of hold in here, in that upper 220, 230 window. Sounds like some bids in the north, maybe around that 230 window going into the second half of the week.
Yeah, we've had $9 drop in cash the last 2 weeks. Do you think we'll be steady this week? Can we hope for that or not?
I think that's a target. Unfortunately, the 4th of July holiday coming into the mix too just makes it difficult for the cash market to get together because of what are going to be the needed supplies with the limited kill schedule this week and things of that nature. So we'll have to see how that kind of plays out. I still think cash is going to be king in this market. I do think there's a window that we'll see the second half of August or after this type of a lull, we could see that market kick back in again because the demand has not slipped anywhere at this time frame. We're still seeing strong retail values. Cattle numbers are very current right now. Packers want a little bit bigger cattle to go through so they get those pounds in the cooler. And I think we're going to start seeing that bid come back up again when those cattle numbers get a little more on the, longer in the tooth, a little heavier weight carcass side of it. That makes it work for the packer.
And the hog market ending mixed, but we've corrected now off of the contract highs or the recent contract highs. Is the market, has it topped now because cash and cutouts are starting to slide a little bit or not?
It sure feels that way, especially when also the managed money or the hedge funds got record long on last week's commitment of traders. So that just kind of opens up the market for some more downside correction. Biggest thing, though, is that cash market. You go look at that cash index on the lean hogs here. We've been rallying since May at $84, peaking out here at $1.11, $1.12. Now we're starting to see that increase, slow, and basically saying that maybe we're getting to a topping point in the market. I think that's some of the biggest things starting to weigh on the futures market right now is the fact that the anticipation that the cash market could start seeing some form of, trend on the negative side.
Yeah. Do you think the deferred contracts are going to hold up maybe a little bit better just because we do have all these disease concerns yet?
That still stays out there in terms of that. And, and also the quarterly hogs and pigs report didn't give us anything too heavy for those windows as well. So, I think numbers can stay in here a little bit. We've got a pretty nice stretch in that front half of the market versus the back half. Might be one of those windows where we see those spreads of nearby contracts versus deferred start to tighten up.
You bet. All right. Thanks so much, John Heinberg with Total Farm Marketing. That is Markets Now.